Today I'm going to talk about the free stocks I'm buying in April 2022. I've been buying these free stocks in the last 2 weeks and I will carry on prioritising these stocks in the month of April as I see these being free of the key opportunities out there in the stock market. So I thought I'd share this with you guys, so if you enjoy it, hit the like button and we'll take a look. Now if you do want to know when I'm buying and selling these companies in real time, make sure you join the Patreon. I post when I'm buying and selling companies in real time on there, so you don't have to wait for the updates a week later, 2 weeks later, after I've actually bought these stocks. So that's the place to be if you want more regular updates. I know recently with the whole S4 Capital situation, I had about 1 million comments within the first hour of that news happening, and I can't make a video in that time because I'm normally working. But on the Patreon, I was posting, or the Discord on the Patreon, I was posting regular updates with what I was doing. So that's where you need to be if you want a bit more of that. There's also 3 exclusive videos a week on there. One of them this week was a live Q&A session, which was about half an hour long, so you can go watch that. And there's also a Discord with 600 members to talk to as well. But we'll get stuck onto the first stock. Now, I mentioned this one on the video that I did last time, which is S4 Capital. I have been buying S4 Capital. I bought this twice in the last week. It was the only stock that I bought last week, and I have been buying some shares in S4 Capital. I've been taking advantage of the dip that it's currently on, so if we do go out 5 days, you can see the stock is down 27%. Before the rally that it had yesterday, the rally took it up 11%. Before the rally that we had yesterday, the stock was down a lot more than that. It was actually down 40% on this news, and it has wiped off nearly, well, over $1 billion on its market cap at the moment. Now the ticker symbol for S4 Capital is S4. It was founded in 2016 by Martin Sorrell, who has a very good background in the digital marketing space, which S4 Capital is currently in. Now the news of why S4 Capital dropped came on the 30th March. This was the day before they were actually scheduled to release their preliminary results. So it said that S4 Capital announces that at 2:30 p.m. today, 30th of March 2022, our auditors PwC informed us they were unable to complete the work necessarily for the S4 Capital to release their preliminary statement tomorrow morning. As a result, the company will release its preliminary results for 2021 as soon as PwC have completed their work. The company believes that the results for 2021 remain within the range of market expectations and continue to trade strongly in the first 2 months of 2022. So the drop was basically on auditors not signing off their accounts for this period of time. Now this is actually the second time this happened. The first time they mentioned previously that it was due to a lot of shortages at PwC, and this time around there was actually no mention of that in the actual press release, but we do know that PwC are currently having a few shortages at the moment. One was Vistry. So Vistry is another UK house builder. They actually had their earnings delayed by the auditor because they didn't sign it off, and this was on the 22nd of February. So we do know there's a lot of auditor issues going on at the moment with PwC not being able to sign accounts off. Now, for this not to be mentioned this time round, what that has led to is a lot of people go, oh, fraud, there's a lot of fraud here, auditors are not signing off the accounts. That means S4 Capital are committing fraud, and that has been the ultimate even though there's no confirmation on S4 Capital saying that there's a problem with the accounts, automatically everyone has assumed the worst and investors have dumped the shares a fair amount. And for me, I'm looking at this drop off thinking, okay, I think this is a buying opportunity in a really good company. I don't think there'll be any fraud allegations. That's just people jumping to conclusions here. And the thing with S4 Capital, more than likely, is if it's something to do with the numbers, it's probably an acquisition that they made, because they make a lot of acquisitions. So they'll have to probably do a lot of paperwork around the acquisitions, the numbers that they have done, the contribution of revenue that they have, the numbers they acquired them for. So if it was a problem with numbers, that's what I think it would be. But at the moment, all I know is that their previous delays were because of shortages with PwC, and that has been very clear with other stocks. So I don't think there's any serious issue here at the moment. Obviously you always have to be careful that what if there is, but the moment with the stock dropping down that 40%, I thought that was a massive reaction to a lot of speculation that automatically there was a lot of account issues going on here, and we have generally no confirmation if that's the case. And if it was something, I'm sure it's just a little bit of questions around some acquisitions that they made or mergers that they made, and realistically this could even turn out to be nothing. So for me, giving me a bit of a buying opportunity into this one. Now if you look at the company's history, the revenue has been absolutely amazing. It's starting to get very close to profitability, and if you start running the profit numbers on it, it's actually not going to start trading at too bad of a price to earnings, especially when you consider this company is going to probably put in around 50% revenue growth this year. And if you look at the progress this company's made in the last 2 years, at the end of 2019 going into 2020, it was doing 215 million in revenue. Now it's doing 653 million in revenue by the end of this year, and it's going to be close to 1 billion by the end of this year, which I should say 2021, and by the end of this year, 2022, it's going to be doing nearly 1 billion in revenue, and that's actually going to put it down below what's going to put it at a 1 price to sales ratio, which is very rare for a company that is, starting to rake up the profitability, the revenue is growing 50% rate. Very rare to be down at this sort of valuation. And financial health-wise, it's pretty solid on the health-wise, only 15% debt to equity. And inside the ownership as well, there's been a lot of buyers inside the company, which is really positive. And as well as that ownership, Martin Sorrell has also 10% of the company, so that's a good insider ownership. And also the S4 employee stock ownership plan is 9% as well, so a lot of insiders inside the company owning the company, which is really positive. So if these allegations do turn out to be nothing, which I think they will do, then you are talking about a massive sell-off on a very good growth company, one of the best UK growth companies out there. And this stock, in my opinion, should be somewhere now around about the £8, £9 mark. So when you take that into consideration, I can easily see a double up, triple up from these sort of prices once these allegations go out or away, or the speculation, should I say. I think this is a really good buying opportunity in this stock, so I am buying this opportunity right now. Number 2 is PayPal. So I am trying to get this into my top 5 holdings. Ideally, I would like to get it into my top 3 holdings. It's very rare that we get these kind of big blue chips on sale, like PayPal is at the moment. If you just go in a longer period of time, you'll see how history this chart just is a lovely tick up. Just brings in really good returns throughout the years. Now, this isn't a stock at 135 billion that's ever going to be a 5x, 10x, but in the next kind of 5 years, do I see this probably bringing me in double the return? Making double money on it, 100%, and that's why I'm buying PayPal. I think in the next 5 years, I will double my money on PayPal, and that's why I'm buying it. Now, it's currently on a massive drop. It's lost 57% of its value at the moment, which I think it was needed. I think it did get way too carried away, but I think this valuation now to trade it, below where it was at February 2020, when you look at the financial improvement, is a bit of an overreaction, and now that's why I'm picking it up. Down at 33 times earnings. The reason why PayPal dropped was off its earnings. Now, the earnings were actually quite good in Q4. The EPS was only a slight miss and the revenue was a slight beat. The reason for the drop-off was the outlook. So the outlook was given and revenue was expected to grow 15 to 17%. Now, this was 2% below what was expected, which isn't that much considering it's still going to grow 15 to 17%, which is very healthy double-digit growth. And then you look at the drop-off that it caused on the share price and you think that's a bit of an overreaction here. So it's still going to grow 15 to 17%, which is really good. And the big reason why it's actually below analyst expectations is because at the moment they have very hard comps. They basically had a exclusive deal with eBay, which is coming towards an end now. And if it wasn't for the eBay revenue, it would be around 20% growth. So as soon as these hard numbers come out the way where they lose a bit of their eBay revenue, the numbers are going to be very good, and it's going to also hurt the profitability slightly, but not a huge amount. This is the thing, you're talking about a 10% reduction of what was expected, and then you look at the share price and it's not 50% off the value of it, and you think, okay, does a 10% reduction in the revenue guidance and the profit growth deserve to translate into a 50% drop on the share price? And I don't think so. Also in this earnings report, there was really positive things. They've got a deal now. Venmo has got a deal, which PayPal only own Venmo as well, so you are getting PayPal and Venmo. Venmo has a deal with Amazon. And also the buy now, pay later part of this company as well is growing massive amounts of rates at the moment. So I think that as soon as we get past these last hard quarters, which were Q1 and Q2 in 2022, this company is going to be back to putting in really good amounts of profit growth, really good amounts of revenue growth at 20% revenue growth, and you're picking it up at 33 times earnings. Now, if you look at the previous growth of this company, you can see here it has a history of growing that revenue, growing that profit growth. And I think that once you get this company, back at, hopefully push towards 20% profit margins, history of growing that revenue at 20% rate, that starts going to the bottom of the bottom line. This is where I can see this company doubling up in share price in the next 5 years for sure. Financial health wise, it's pretty strong as well at 41% debt to equity. It's got 9 billion in debt, but it's got 9.5 billion in cash, which is great. And as well, there has been a lot of insiders buying this company on the dip as well, which gives you a lot of confidence at the moment. And just on a metric point of view, you can see how cheap it is from here. If you look at the total enterprise value to revenues, it's down at a 4, and historically it's traded around an average of around about 8, but the lowest it has been is a 6. If you look at the total enterprise value to EBITDA, you can see at the moment it's trading down at 17. Historically, this trades around a mid-20 range as well, which also is significantly cheap and is also at historic lows. So even the metrics are very, very cheap on this company now, and the growth is still very strong. So I am taking this opportunity to buy PayPal. And number 3 is Facebook, or I need to start saying Meta a bit more. So Meta is currently down at $224, and if you go to a year ago, if you said to me that you could pick up Facebook up at $224, I would not have believed you. And this is the thing that makes me laugh now, is that we are getting these opportunities, we're getting these big techs that don't really dip down at these crazy valuations, and people and investors look at them as like bad opportunities now, like, oh yeah, I'd love to get PayPal down at $116. Oh yeah, I'd love to get Facebook at $224. And they come around and people are like, oh no, I don't know if I want to buy it now. And it's, you got to look at the drop off and the news that's out there and think, okay, does this really affect the company in the long term? And Facebook's another big tech that I'm picking up that very rare that it has, dips of 40%, getting Facebook down at 16 times earnings. The thing is, the average company trades at like 20 times earnings, and you're picking up way above an average company. Like, this is a fantastic company down at 16 times earnings. It's ridiculous what this is getting valued at. So I am picking up some Facebook shares or Meta shares at the moment. Now, if you exclude the metaverse, which you can debate on a separate video whether or not you think the metaverse, how big that opportunity is going to be. Right now with this company, you're picking up 4 major apps. You're picking up Facebook, Instagram, WhatsApp, Messenger. If you look at the top 100 downloaded apps in 2021, Instagram, number 2, just being beaten by this one at the moment, which is the one they're having a bit of a rivalry with at the moment. Number 3, another one, Facebook. Such people claim this to be a dead platform, but it's very much not that. Number 4, WhatsApp. You could argue they're one of the most pointless apps you have, but you definitely need it because so many people use it. And the next one, which is Messenger. This company has 4 of the most 10 downloaded apps in 2021, which says a lot. So even if the metaverse isn't successful, which I think it could be, you're picking up a company here that has the 4 of the most 10 popular apps, and that has major growth going forward, especially this one, Instagram. I think that has so much growth going forward. Now, Facebook at the moment had some, once again, weak guidance. They gave a guidance that represented 3 to 11% year-over-year growth as it goes through tough comps and app changes as well with Apple. Now, this is only Q1, but at the end of the day, I think at the moment, a lot of people are factoring in that, okay, what happens if Facebook grows 3%? I think that's what they're factoring at. Facebook growing at 3%, you go, okay, I can justify, maybe 16 times earnings for this. But realistically, what happens if Facebook comes out with, 9%, 10%, 11% growth? And what happens if through the year 2022 they start pushing back into that double-digit growth? Well, if that's the case, picking up a double-digit growth company at 16 times earnings is incredibly cheap, and it's a fantastic company. If we look at Facebook previously and we go on the past performance, this company puts in major amounts of growth. The profit margins are, up at 30%. Look at the amount of profit that's going to that balance sheet, how they're turning that into share buybacks, the revenue growth, and even if that slows down to 10, even 15% growth, that's still going to be, really good growth, really good profit growth, and the valuation now is just so cheap. Just look at the balance sheet, there's no debt on there. They're sitting on, the amount of cash they're sitting on is currently 48 billion. They've got a lot of things that they can do with that stock as well, buybacks, dividend potentially, which we don't really see from a lot of big tech companies nowadays, but that's always an option. And when you look at a valuation point of view, total enterprise is down at a 4, the lowest it's ever been. Normally it's around a 5 or 6. You look at total enterprise to EBITDA, it's currently a 9, and that's previously a lot higher as well. You look at the price to normalized earnings, it's down at an 18 here. And the thing is, this is still, historically, Facebook's always been disrespected. It's always been the disrespected stock out there. It's always traded at, when you look at the valuations of a lot of big tech, whether it be PayPal, Amazon, Google, Netflix, this one has always put in, a really good balance sheet, unbelievable growth, really big amounts of profit, and it's always traded at a lower valuation. And that's the thing is, Facebook's always been disrespected, and now it's getting even more disrespected. 16 times earnings for a company of this standard is just way too low. So yeah, for me, I am picking up these shares in Facebook. So those are the 3 stocks I've been buying in April 2022. Hope you enjoyed the video. Let me know what you've been buying as well, and I'll see you in the next video.